If you're looking at your portfolio and wondering what in the world happened last night, we have a lot to catch up on and considerations to make in your portfolio so you can profit safely. So early this morning, Vladimir Putin said Russia did not plan to invade Ukraine, asking his military to halt. This turned out to be an obvious diversion, as only moments later, explosions could be heard and a full-scale invasion of Ukraine began. Russia breached borders, attacking military targets. At least 40 soldiers and civilians have lost their lives in the hours since the invasion. President Biden has said that the U.S. and its allies will respond to the invasion in a united and decisive way, and that the world will hold Russia accountable. So what is going to happen next, and what will this do to investments like stocks and crypto? And is there anything that we can do to invest and protect ourselves? Let's cover this and a whole lot more. So, as you know, for weeks, there have been concerns of Russia invading Ukraine. No one was totally sure if this was real or if this was Putin just, trying to buy the dip or something. Uncertainty is what markets hate most. And this video will be pretty crypto focused, but because crypto is new and we don't have a huge history to draw insights from, we'll have to look back in time to find examples in the stock market in reaction to conflicts and war. And also, I apologize if this video has less production quality than my typical content. I knew that this information would be most valuable sooner than later, so I woke up early to put together the best information possible. Also, I need to commend our investor group for this morning. I was checking in and saw tons of people freaking out about this invasion in their investments, and the community was coming together to think in a very logical way, and it was awesome to see. There's a huge benefit to just having other investors to talk to because it prevents you from doing anything crazy. You're just more rational together. So if you have investor friends, I recommend starting a group chat, or if you want to join our group, you'll find that linked in the description through Patreon. Now, before we talk about the completely unexpected effects of war on investments, we need to talk about the impact Russia and Ukraine as countries have on the global economy. And this matters because if these two countries are key players, war is terrible for everyone. Really, really terrible. And at first glance, Russia seems massive, a GDP of 1.7 trillion and an insane amount of land mass. But the more you look, the more you question the importance. I mean, don't get me wrong, 1.7 trillion is a huge number, but it's not the biggest ever. For comparison, the state of Texas has a slightly larger GDP of 1.77 trillion. California is nearly double Russia at 3.1 trillion. So Russia is nothing to shake a stick at, but context is always good so we can understand the full picture and the importance. And more importantly than money, Russia has nukes. So checkmate Texas, I guess. Now, how would a sanction against Russia really play out in the world economy? And will investments tank as a result? Well, according to the New York Times, the impact of a Russian invasion will be nowhere near the impact of something like the pandemic. Russia is not a powerhouse exporter to other countries, and, quote, Russia is incredibly unimportant in the global economy except for oil and gas. Of course, oil and gas matter, and that's why we've seen crude oil prices spike on top of 40+% inflation in that sector. This is bad. But is this the end of the world? No, probably not. Then we have the economy of Ukraine. What would an impact here do to the overall world economy and our personal investments? Well, they do some exporting and have a GDP of 155 billion, which is fairly large, but for context here, that's actually equivalent to about 3 months of sales at Walmart. So at first glance, you might think, looking at this data, well, my crypto and stocks should be relatively fine. I mean, my Bitcoin has very little to do with anything in Ukraine or Russia. The issue is sentiment. Investors are fearful and very risk adverse. Whenever there's any additional uncertainty, we will see money move out of the riskiest assets and into the safer ones. This is why growth and tech stocks have dropped more dramatically than the rest of the industry, and why crypto, who seemingly isn't a part of any of this, is being impacted in a big way. There are a few ways to check if investors are moving to safer assets. In stocks, you can check the 10-year treasury yield. In crypto, you can check stablecoin market caps. This isn't perfect, but basically the idea is that investors who try and ride out the volatility will swap their crypto for a stablecoin pegged 1-to-1 with the dollar, and then maybe lend that out or just keep it on the side for a while until things calm down. So now that we have that context, how have investments performed in the past in times of conflict and war? Because once we understand this, we can then understand the best investments that we can make to make a profit. There's something called the war puzzle, and here's how it works. In the past, when there's a pre-war phase where it seems like the likelihood of war is increasing over time, investments will decrease in value during that pre-war phase in anticipation of the conflict. But when the war actually breaks out, something surprising happens. Stocks and other investments tend to pop up in price. So it's kind of like you're anxious to give a presentation in front of class all week. You know, the morning comes and you're absolutely terrified. But once you're actually in front of the class, you realize maybe it's not quite as bad as I thought. And then the second part of the war puzzle is that if the war starts as a surprise, then stocks and other investments decrease in price as a reaction to the unexpected events. So the war puzzle tells a lot about human psychology and our kind of negative framing. We want so badly to not lose money that we'll expect the absolute worst in anticipation. And this war puzzle is actually backed by data. Here we can see a list of geopolitical events and how the market reacted. A surprise event like 9/11 saw markets drop nearly 5% day one and 11.6% overall, but that took just 31 days to recover. The Munich Olympics catastrophe saw a total drawdown of 4.3% and 57 days to recover, which I actually talk about this in the video I posted yesterday on the Olympics, and you have to check that out. It's one of my best videos ever. I'll have that linked in the description below. And Pearl Harbor was the most significant on the list, seeing a total drawdown of 19.8% and a 307-day recovery. All of this is to say that typically the buildup hurts prices in a dramatic way, but then when the event actually happens, if there's anticipation for that event, it tends to not be quite as bad market-wise as we may think. Now, of course, we're not fortune tellers and we can't be certain, but it does give a little bit of peace of mind. Now, before we go into crypto-specific tactics, let's chat about which sectors typically perform best during downturns and uncertainty. Of course, we already talked about oil. If you happen to be the son of an oil baron, you're probably sitting pretty good today, but for the rest of us, what other options do we have? The first and biggest is actually bonds. Now, bonds have gotten a bad name because stocks have been killing it for more than a decade, and bonds typically perform inverse to stocks. Bonds returned 12% in 2008 and 8% in 01, 02, and 03. So call bonds a dinosaur instrument all you want, but they do their job when things are bad. Then we have gold. When things are scary, people like to have an asset that can actually be held. Gold has seen a nice increase in the last week, especially in the last day. And then there's certain stock sectors that do better than others. The sectors that tend to do best are the ones that have to do with things that are pretty hard to live without. You know, healthcare, consumer staples like food, telecoms, REITs, utilities, and of course defense if you're trying to bet on war. Generally, luxury goods and entertainment don't do quite as well during downturns. So what about crypto, and how can we actually profit? Crypto has had a hard go at it recently. There's no surprise there. China tries to ban it every other week. Russia's bank had a report comparing crypto to Ponzi schemes, calling a ban throughout Russia. But then it turned out that that's not really how they felt, because now they're looking at developing their own crypto, especially now that they decided to try and pick a fight with the rest of the world, and they may be kicked out of the SWIFT banking system, which facilitates bank-to-bank transfers. So they kind of like crypto now. I don't know. Then there's interest rate concerns and the fact that if interest rates go up, investing gets more expensive and investors are less likely to invest in risky assets like crypto and growth stocks, which can depress prices. And then there's the potential for regulations in the US around cryptos, which could stifle innovation. It's like crypto just can't catch a break. Every month there's just something smacking it back down. But you know what I love? It just keeps on pushing. Gets smacked down, brushes itself off, and just starts plodding its way back up again. It's kind of like Rocky, coincidentally, being knocked down again and again by that big Russian guy. But what really matters is adoption in crypto is going up. Total value locked in DeFi is increasing, and institutional investors are warming more and more to digital assets on their balance sheets. Now, given everything we know, let's talk ideas on how to profit. The first and most obvious is just buying the dip. Of course, this is easier said than done when you might be saying, yeah, you know, I bought the dip in December and look at how that panned out. I think the important part here is to always leave some additional cash on the side for future dip buying opportunities, and then you're just never all all in. My strategy during this downturn is to focus on the largest layer 1 crypto projects that I like most. In my opinion, now isn't the time to buy the tiniest altcoins. There's just too much volatility. So my buys have been focused in the top 10 range, projects that have lots of projects built on top of them for more diversification. And then beyond this, I've been utilizing other low risk strategies. One I just started doing a few weeks back is called Spot Futures Arbitrage Bots. You can set this up on Pinex, which I'll have linked in the description. Basically, this is a bot that buys both a long and a short position of a crypto and then collects a special type of fee called a funding fee. What's awesome about this is that you can make money with nearly zero volatility risk in any market. In downturns, it seems to pay about 5 to 10% APR, but then when the market swings back up, you can make upwards of 50+%. I'll have a video linked in the description as well with more information on how exactly that works. Now, beyond this, you always have stablecoin lending, which is one of my favorite aspects of crypto, period. I mean, is there anything better than waking up to check your account to see you just made a few dollars doing absolutely nothing? I do most of my lending on KuCoin, and I'm most familiar with how they do things, so this may vary a little bit depending on what site you use, but on KuCoin, they add a layer of safety by offering an insurance fund. So let's say you made $100 in profit lending out USDT. $5 of that would go to KuCoin, $10 would go to an insurance fund. This fund ensures that you get paid no matter what if the borrower can't. And I've looked through tons of transactions on my KuCoin app, and I've never actually seen the insurance fund used, but it does offer a nice little peace of mind that it's there just in case. I've been using KuCoin for about 9 months now, and have personally made over $24,000 in profit on lending alone, again, with no volatility risk. I'll have them linked in the description as well, and that link will save you a little bit of money on trading fees. Or you can go the DeFi lending route and lend out something like UST for a pretty darn good interest rate. However, it's important to remember that this won't be held on an exchange. So if you want to quickly transfer that and buy the dip, there's going to be a few extra steps. Now, I want to end on one final thought. No matter what happens in Russia and in the markets, it's always going to pay better to try and keep emotions down. The news is going to try and get those emotions high, but just try to keep them down. Freaking out on news is a great way to lose money. So set your long-term focus and invest accordingly. I'll be over in our Discord and private community all day to chat more about today's crazy events, and I hope to see you over there.